All right, Fed rate cuts bets restored for the upcoming FOMC meeting in December to 80%. That led to the US dollar strength being lackluster yesterday, and as well as a continuation of a second consecutive session in rally in the major US stock indices. Yesterday, at the late Asia session on Monday, the Hang Seng Index rallied by 2%, and that's the best rally that's been seen in close to 2.5 weeks, driven by a push-up in Chinese mega cap AI technology stocks, riding on the coattails of Alibaba that has just released its AI app Q1 on par with ChatGPT, and as well as gold rallied back up above 4,100 on the backdrop of a renewed resurgence of Fed rate cut bets in December. Good morning to all. I'm Kelvin here. Welcome back to your daily dose of market insights for Tuesday on the 25th of November 2025. So as usual, before we kickstart our daily dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so as usual, before we jump straight into the intraday technical outlook on the broad-based cross asset classes, let's have a quick recap what has taken shape yesterday. So yesterday, key important event is the resurgence or the revival of Fed rate cuts bets for the up and coming December meeting, not too long from now, about 2.5 weeks from now, where the CME Fed Watch 2, based on data from the Fed Funds futures market, has saw a big uptick in rate cut bets to rose to 81% as we are speaking right now. So for those who are new to this, you can just Google CME Fed Watch 2, and we are able to actually look at the pricing expectation by Fed Funds futures trader on their view on up and coming FOMC monetary policy stances. So for the next meeting will be on the 10th of December. Initially, last week, it went out to a low of 30% to 40%, where that has been greatly reduced, and that causes market participants to have a sell-off on the major US stock indices, indirectly causing the US dollar to jump as well. So, but however, this rate cut bets has increased greatly in the last two sessions. Yesterday, it jumped up further to 80.9%. So in fact, we are speaking right now, it's at 80.9%, that the Fed Funds futures trader is expecting the US Federal Reserve to cut by another 25 basis points on the 10th of December to bring the Fed Funds rate down from a current rate of 3.75% to 4% to 3.5% to 3.75%. So that will be a potential third rate cut for this year, reinforcing the ongoing interest rate cut cycle by the US Federal Reserve. And what's also interesting is that if we were to look back or look forward on the next few meetings going forward into 2026 over here, by looking at the aggregated tab. So what you could see on my screen, so let me put it larger so that for you guys to see. So on my screen over here, what you could see that the next cut or the fourth potential cut in this ongoing interest rate cut cycle will come in on the 29th of April next year, 2026. A rather high chance of 75% chance that the Fed will bring down the Fed funds rate by another 25 basis points. A fourth cut, 3.25% to 3.5%, and a sixth cut to come in on the 29th of July 2026 at 77%, 3% to 3.5%, and before the year ends in 2026 on the 9th of December 2026, not already high chance, but still above 50%, a 63% chance that the Fed will do the sixth cut at 2.75% to bring the Fed funds rate down to 2.75% to 3%. So all in all, market now is pricing in potentially 3 more interest rate cut in 2026. So that causes the US stock market to rally yesterday for the second consecutive session. So the main rally that took shape was the beaten down, heavily tech-weighted AI-driven Nasdaq 100 that is outperforming the 4 major US stock indices. The 3 other major US stock indices rally up by 2.62%. Then thereafter, the SPX as well, that has also a higher concentrated weightage on this mega cap technology AI driven stocks, up by 1.5%, and the Dow Jones underperformed by 0.4%, the Russell 2000 up by 1.9%. So what we could see over here is that we also have another reinforcing news flow, which up from Amazon. So Amazon is also part of this AI bandwagon as well, where Amazon yesterday reported that they are going to spend another 50 billion to expand AI services to US government agency. So that actually created a positive feedback loop into the mega cap technology stocks as well as the US semiconductors industry. So what we could see, this is the heat map of the S&P 500. Deeply in the green is all those mega cap technology stocks, AI related. Nvidia up by 2%, and we have Apple up by 1.6%, Amazon for sure 2.5%, and Google up a whopping 6%. And if you look at the groups, the heat map over here, what we could see is that those beaten down AI driven team play that was very weak last week managed to stage a return of 3%, which is the communication service sector, where Metal is part of it, as well as Google, Alphabet, 3.6%, and the technology sector is consists of Nvidia, which is up by 2.5% over here. But what's interesting over here is that yes, even though we see a 2-day rally in the major US stock indexes on Friday, but as a whole, month to date, the rally on the US stock market, it's still going to be rather weaker. So what do I mean by that? So let me share with you this particular chart over here. So hopefully it's out. Yeah, this is the chart. Right. So this chart, what we could see is a month to date performance of the Nasdaq 100 and the S&P 500. Okay, you can look at my screen. So month to date, the Nasdaq 100 and the S&P 500 is down by a negative 5% plus on the Nasdaq 100 and negative 4.5% plus on the S&P 500. So if it continues to be as of yesterday's closing price, they are actually on the road to actually be a biggest monthly drop since March this year, during the onslaught of that US Liberation Day announcement of the reciprocal trade tariffs. All right, so putting a pause of May, June, July, August, September, October, 1, 2, 3, 4, 5, 6 months of monthly consecutive positive gains. All right, over here. And also what's important over here that we know that this S&P 500 and the Nasdaq 100 is pretty much driven by a mega cap weightage stock on Nvidia. So Nvidia is being the biggest market cap stock in the Nasdaq 100 and the S&P 500. So that would have also a potential impact on the performance of the Nasdaq 100 and the S&P 500 going forward. So what I could see over here is that very quickly, let me share with you the chart of Nvidia. So Nvidia yesterday managed to bounce off from this key support that I highlighted, 177.70. Yesterday, it managed to stage a bounce, but in today's Asia session, it managed to retest this 177.70 again. So if you look at the Nvidia chart on the after hours, okay, US stocks very interesting is that they do trade after hours. That means after the US session close at 5 a.m. Singapore time now, they trade for around 2 hours more in the after hour session. So in the after hour session, Nvidia is actually down by 1.5% to trade at 179.81. So 179.81. So if you look at the Nvidia chart, if you switch it to the hourly chart in trading view, you are able to see the after hours trading session over here. So there was actually a sell off and the test again during the 7 a.m. mark Singapore time right now, and the after hours is closed right now at 8 a.m. Singapore time. So the market trade 3 more hours after the close of the US session. So we call that the after hours trading hours. So after trading hours was lackluster. It tests the 177.70 support and managed to survive there. So what causes this sell-off of 1.5% during the Asia session, which is the after hours session, is due to this negative news flow from Nvidia, stating that on reports of Google challenging its highly premium Blackwell AI chips. So Meta Platforms, okay, which is also one of the highly hyperscalers that's spending tremendous amount to actually jump up their AI capabilities by building a data centers or whatsoever. Metal Platforms is in talk to spend billions of Google AI chips known as Tesla Processing Unit (TPU), in short, to be used in data center from 2027. So they're trying to diversify away from their supply. So we know that NVIDIA is the premium guy, or the premium company that supply this GPU by their Blackwell GPU. But in the last 1 month or so, Google AI chips called Tesla TPU is able to actually pick up the competition from Blackwell. That means they try to improve and they cost less expensive compared to Blackwell. So right now, Meta Platform has decided to actually diversify away from Blackwell and to actually in talks to spend billions to purchase Google AI chips instead. So that causes a negative feedback loop into NVIDIA. So if NVIDIA stock continues to face this backlash from other, we call it a driven so-called a processor that able to actually process AI, we call it a business model at a cheaper cost. Example on Google AI chips as TPU or the Tesla processing units, that could actually add weight downside, we call it a sentiment on the Nasdaq 100 and the S&P 500 potentially, given the fact that NVIDIA is the biggest market cap stock on the Nasdaq and the S&P 500. So that being said, for sure, going forward, the key support level to watch out for on NVIDIA will be at the 177.70 level. So if this level doesn't hold, potentially we may see a negative feedback loop into the S&P and the Nasdaq 100 going forward. All right, there's something to look out for. Now, with that, let us now shift our focus now to the FX market. So the FX market, due to the increase in the Federal Reserve rate cut bets to 80% for the December meeting, that causes the dollar to remain lackluster yesterday. So I could see the dollar strength remains muted. So this is the 5-day rolling performance of the US dollar against other major currency as we are speaking right now. And if you look at the US 2-year Treasury yield, minus off average 2-year of this key major economy, Germany, UK, Japan, Canada, Swiss, AU, and China, the US Treasury 2-year premium against the 2-year yield of these developed economies also is sliding downwards. So from an initial high about 1.5%, it actually reduced down to 1.46%. That means indicating that the US Treasury real premium, US Treasury yield premium against this country 2-year government bond yield, and average, a weighted average of them, has reduced. So that also reduced the dollar strength as well in the last 3 sessions. So if you look at the US dollar index, it traded in a spinning top for 3 consecutive sessions, starting from Thursday, Friday, and yesterday, Monday. So a spinning top, a daily candlestick spinning top, right below the upper limit of a medium-term pivotal resistance zone at 100.54. All right, indicating lackluster US dollar strength due to the rising bets of the US Federal Reserve rate cut bet resurgence for the December meeting. All right, so that being said, that means i.e. Dollar strength or may start to trade sideways, or the dollar strength may get muted, and various US dollar pair may start to trade sideways going forward, at least in the shorter term over here. So another news flow I share with you guys is this sudden intraday bullish reversal from the Hong Kong stock market, driven by China big tech stocks over here, with Alibaba yesterday announcing that its main its main remodified AI app debuts strongly in effort to rival ChatGPT. So Alibaba Group Q1 app drew more than 10 million downloads in the week yesterday after it relaunched yesterday, boding well for a longer term effort to build a rival to OpenAI ChatGPT. So this part of this ongoing high-tech rivalry between US and China that is still on the backdrop that we be mindful of. So given this strong, we call it uptick on Alibaba latest revived Q1, we call it AI app that drew more than 10 million downloads worldwide. That causes the China big tech stocks to rally. Alibaba with the likes of Baidu and NetEase to rally as well, and that saw a 2% jump in the Hang Seng Index yesterday. And in today's Asia session, it continues to gap up again as well, adding another 1.16%. 1.16%. So later on, we touch more about that on the intraday technical outlook, all right, on the Hong Kong 33 that's representing the Hang Seng Index, all right. So without further ado, let us now jump straight into the second segment of the daily dose, which is the intraday technical outlook on the broad-based cross asset classes. So before that, let me expand my screen so that you guys can have a better view of the charts. All right, so let us start with the FX market first. So on the FX market, given the Fed rate cuts bets has starts to research to 80% for the December meeting. The euro dollar also starts to trade sideways as well. So the euro dollar yesterday bounced during the European session, but after that the momentum starts to slide and trade sideways during the US session, hovering still below our short-term pivotal resistance at 115.50 that we highlighted yesterday. So given the kind of spinning top candlestick that is being formed on the US dollar index for 3 consecutive sessions. So I do not have much conviction on the euro dollar to slide down lower to retest the 5th of November and the 6th of November minor swing low at the 114.75 level that we have yesterday. So from a bearish bias day for today, due to the latest elements that's being seen and the increase in the Fed rate cut bets to 80%, like I explained earlier on, I have no conviction right now for ongoing bearish bias on the euro dollar. So with that, I'll flip to a neutrality stance instead. So neutral between 115.50 and 114.95 for now on the euro dollar. Very similar on the sterling dollar as well. So the sterling dollar also traded sideways below our short-term pivotal resistance level at 131.40. So flip to a neutrality stance between 131.40. We also correspond with the 20-day moving average as well, that is in pink over here. And the lower neutrality limit will be last Friday minus swing low that confluence with last Thursday minus swing low at 130.40. So switching from a bearish bias to a neutrality stance on the sterling dollar for today as well at 131.40 and 130.40. Onwards next will be the Asia Pacific currency, will be the Aussie dollar. So what's interesting in the Aussie dollar is that the RSI managed to shape a bullish breakout from a parallel descending trend line that previously was in play from 13th of November, 20th of November, 24th of November in early Asia session before staging a bullish breakout in the US session yesterday. So with this positive element that's being seen on the hourly RSI, I will have a bullish bias for today over here using the medium-term pivotal support level at 64.40, 64.25, having a bullish bias for a potential push-up towards the 20-day moving average. So it's more like a intraday mean reversion rebound in first step. First resistance to watch out for with 64.67. So this has been a key stiff near-term resistance since the start of this week. So a breakout above 64.67 will increase the odds of at least a minor mean reversion rebound to retest 64.95, which is the minor swing high area of 19th of November and 20th of November. A breakout above 64.95 will increase the odds of a further push up towards 65.25, 65.40 next, which confluence with the 50-day moving average. Only a bearish breakdown below 64.40, 64.25 will negate today's bullish bias on the Aussie dollar to see a further slide towards 64.15, 64 figure level, which is the minor swing low area of 22nd of August and the congestion area of 23rd of June this year. All right, so that's for the Aussie dollar, flipping to a bullish bias given the positive element that's being seen on the hourly RSI, which I shared with you guys earlier on. Okay, next up will be the dollar yen. So the dollar yen continues to remain capped below our first resistance level at 157.13, which I highlighted yesterday. So still no change, still looking for a potential further setback on the dollar yen on fears of FX intervention as we approach this 1580 level, figure level, 15880 level. So using the pivotal resistance level in short term at 158 figure level, 15835, still maintain that bearish bias for a potential minor setback on the dollar yen towards 155.95 in first step. Only a breakdown below 155.95 may see further potential weakness to expose 15525/15485, which confluence with the 20-day moving average, and as well as the ascending trend line support, the minor ascending trend line support that is still in place since the low of 29th of October. Only a squeeze up above 15835 will see exposure to retest the upper limit of that medium-term pivotal range resistance at 158.80 next. And this 158.80 is rather important because this 158.80 in the past managed to induce BOJ intervention that came in on 11th of July and as well as on the 26th of April last year, where the MOF, the Ministry of Finance, instructed BOJ to sell the dollar and buy back the yen during these two occasions that occur around the 158.80 level. All right, so that's for the dollar yen, and so sum up all the intraday technical outlook on the four major US dollar pair. So now let us now proceed to the major stock indices over here, starting with the Hong Kong 33 over here. So the Hong Kong 33 managed to shape a bullish reversal and reintegrate back above this channel, the descending channel level. All right. Previously, it was a pullback support, pullback resistance, can't hold and reintegrate back above it. All right, over here. So with that, I got to respect yesterday price action over here. So it seems to us that market participant wants to retest the next resistance level at 26,310 level, which is the 20-day and the 50-day moving average confluencing at this level as well at 23,610. So with that, I will flip to a bullish bias, pardon me. So I will flip to a bullish bias using 25,700 as my short-term pivotal support level for today. Above 26,045 may expose the next intermediate resistance at 26,310 next. Only a bearish breakdown below 25,700 will reinsert the bearish bias view to expose the next near-term support level at 25,410, and even last Friday minus swing low at 25,150. So given the sharp bullish reversal on the Hong Kong 33 represent the Hang Seng Index, I gotta respect the positive price action and flip to an intraday bullish bias for today. Pardon me. I'll flip to an intraday bullish bias for today using a short-term pivotal support level at 25,700 with next resistance level at 26,045, followed by 26,310 next, which confluence with the 50-day and the 20-day moving average. Next up will be the Japan 225 that representing the Nikkei 225. So no change. Price action continues to trade sideways within our neutrality zone at the pivotal support level, but can't surpass above the upper neutrality zone at 50,730, which is correspond to the 20-day moving average. So still maintaining that neutrality stance between 50,250/50,730, and the lower limit will be our medium-term pivotal support that confluence with the rising 50-day moving average at 48,450. So maintain our neutrality stance for the Nikkei 225 for today. Right, next up will be the Germany 30, represent German DAX. So the German 30 and the German DAX continues to remain lackluster as it going to shape a series of lower high. So a bit of whipsaw yesterday at the 23,300 short-term pivotal resistance level. So no change, still maintaining this 23,300 short-term pivotal resistance level to have a mild bearish bias view on the Germany 30, given that it can't broke below our short-term near-term support level at 23,080. So two key support level to watch out for today: 23,080, followed by last Friday minor swing low at 22,935. So still maintaining that mild bearish bias on the Germany 30 using 23,300 as my short-term pivotal resistance level with two near-term support level to watch for today: 23,080, 22,935. Only a bullish break up above 23,300 will see a retest at 24,450, which is the 200-day moving average, and as well as the former minor range ascending rate, former minor medium-term ascending range support level drawn from the low of 19th of June this year turns into a pullback support at 23,450 as well. A breakout above it will see a further squeeze up towards 23,665. So that's for the Germany 30. All right. Up next will be the major US stock indices, starting with the US Wall Street 30 that's representing the Dow Jones Industrial Average. So what's interesting yesterday is that the Dow Jones Industrial Average can't break above our short-term pivotal resistance level that we highlighted yesterday, 46,335, 46,575. So that is the upper limit at 46,575. Right. So let me put it in writing. Okay, so 46,575 upper limit of that short-term pivotal resistance zone that we highlighted. So very interestingly, it can't break above this level. So, and the RSI continues to shape a series of lower high over here. Okay, so with that, I will still maintain that short-term intraday bearish bias view on the US Wall Street 30 represent a Dow Jones Industrial Average, given that it can't break above 46,575. So no change, maintain that mild bearish bias view using 46,575 as my short-term pivotal resistance level. First support level to watch will be this 46,010 level, which is almost tested yesterday during the start of the US session, where I printed an intraday low of 46,107. All right, so first support level 46,010, followed by last Friday minus swing low at 45,760. Only a bullish breakout above 46,575 will invalidate today's bearish bias view to see a squeeze up to retest 46,950 in next step, which correspond with the former minor ascending channel support from the low of the 13th of October this year, now turns into a pullback resistance that also confluence pretty much closely with the 20-day moving average as well. All right, so that's for the US Wall Street 30. All right, next up, the SPX 500. So the SPX 500 managed to squeeze up above our short-term pivotal resistance level, which is at around 6,650 level, and now residing exactly at the 50-day moving average that is acting as the next near-term support, near-term resistance level. So with that, I will have a neutrality stand for today on the SPX 500. So neutral between 6,720 and 6,655. Only a bearish breakdown below 6,655 will reinstate the bearish bias view in short term to expose the next near-term support level at 6,570 next. Right, so that's for the SPX 500. Next up will be the Nasdaq 100. So the Nasdaq 100 also squeezed up above our short-term pivotal resistance level and now hovering right below the 50-day moving average, acting as the next intermediate resistance level that we highlighted yesterday. So neutral between 24,940, which confluence with the 50-day moving average, and as well as the lower limit will be 24,500, which is yesterday's short-term pivotal resistance, now turns into a critical near-term support level. So neutral between flip to a neutrality stance of the Nasdaq 100, neutral between 24,940 and 24,500. Only a bearish breakdown below 24,500 will reinstate that short-term intraday bearish view to see a retest of the next near-term support level at 24,170. All right, so that sum up all the intraday technical outlook on the major stock indices. So I would say is rather a mixed bag performance potentially for today. Okay. Now, onward next will be the commodities market, starting with gold XAU/USD. So for gold, it managed to squeeze past our pivotal resistance level at 4,100 handle, 4,133. So right now, momentum has started to be rather positive, at least on the intraday basis, given price action managed to survive on last Thursday, last Friday, and on the Monday early Asia session at the 4,038 level, which is the 20-day moving average. All right, that managed to store the intraday weakness yesterday during the Asia session before it staged a bounce during the US session and did a bullish breakout above our short-term pivotal resistance at the 4,133 level. So with that, I got to respect the current intraday short-term bullish price action and flip to a intraday bullish bias for today using 4,105, pardon me, 4,105 as my short-term pivotal support level. So I flip to a intraday bullish bias using 4,105 as my short-term pivotal support level. Two resistance level to watch on the intraday basis, 4,155, followed by 4,203, which is the minor congestion area of 13th of November, and 14th of November, where the bulls got rejected and shaped that sell off previously. All right, so a breakout above 4,203 will see a further rally towards 4,267 next, which is the 76.4 Fibo retracement of that previous minor corrective decline from the fresh all-time high of 20th of October, current all-time high of 20th of October, to the minor swing low of 28th of October this year, which is the 76.4 Fibo retracement at 4,267, that confluence with the minor congestion area of 20th of October as well. Only a bearish breakdown below 4,105 that would invalidate today's short-term intraday bullish bias to see a drift down again towards 4,038. Only a breakdown below 4,038 will see further weakness towards 3,980, which confluence with the rising 50-day moving average. So that's for gold XAU. Lastly will be the West Texas crude oil over here. So the West Texas crude oil continues to remain below our short-term pivotal resistance level, where it did a bearish reaction during the Asia session today as we are speaking. 59.32 for sure will be our short-term pivotal resistance to maintain that intraday bearish outlook again on West Texas oil. Two key near-term support level to watch for today in our bearish bias: 58.31, followed by yesterday's Asia session low, 57.54. All right, over here, only a breakdown below 57.54 will expose further weakness towards 56.80, which is this ongoing complex minor sideways range configuration that managed to trap below the 50-day moving average, which is the minor swing low of 17th of October and 21st of October this year. Only a bullish breakout above 59.32 will invalidate today's intraday bearish bias view to see a squeeze up towards 60.40. Maximum 61.30, 61.30, 61.70, which confluence with the 50-day moving average, and as well as this ongoing upper limit of this minor complex sideways range configuration that has been in place since the low of 17th of October this year. So that's for West Texas crude oil, and that also sum up all the intraday technical outlook on all these broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key data to look out for today? So today, during the European session, will be rather quiet, but the action will come on the US session, where previously delayed data due to the closure of the US government shutdown, or the closure of the US government, pardon me, we'll see the delayed data of September producer price index releasing. Market participant will be having a close eyes watch on that, because that could also influence the CPI data as well going forward. So market is expecting an uptick on the core PPI. The month will be rather volatile. So the core PPI year-on-year market is expecting almost unchanged, 2.7% year-on-year versus the previous month of August at 2.8%. And market will be also focusing on retail sales figure as well. So retail sales, both of them will be out at 9:30 p.m. Singapore time. So retail sales month-on-month for September, market is expecting a slight dip down again to 0.4% from 0.6% in the previous month of August. So if retail sales figures came in lackluster as expected, or even worse than expected at below 0.4%, that could reinforce that various dovish key prominent US Federal Reserve official view, which is Fed Wheeler, and as well as Fed Williams on last Friday. So Fed Wheeler yesterday called for a December cut, then meeting by meeting data dependent. Right, onward next with the chart as well, with the economic calendar to take note of. So these are more lagging data. So market will be focusing more on a forward-looking data, which is the 11 p.m. Conference board. Where is it? Yeah, 11 a.m. 11 p.m. Pardon me, not a.m. A bit of tongue twisting today. Pardon me. At 11 p.m. Singapore time. I repeat again. Later Tuesday at 11 p.m. Singapore time, the more forward-looking key US economic data will be the Conference Board Consumer Confidence Index for the month of November. So this is pretty much up to date. So, and we know that consumer confidence drive retail sales going forward as well. So market participants also expect a downtick to 93.5 from 94.6 in the previous month of October. So if it came worse than expected at around 92 to 90 figure level, that could reinforce further Fed rate cut bets for the month of December. in the upcoming meeting. So then thereafter, there will be a quiet US session. All right. So that sum up today's daily dose of market insights. I'm Kelvin here signing off. I wish you all a great day ahead and we shall speak again tomorrow. Thank you.